Good evening. I'm Epstein with your Metal Market Wrap-Up, and this wrap-up is for Thursday. We're at the 6th of March, 2025, and the time just after 5:50 p.m. Central Time. I hope you all took a look yesterday at that video that I had on the website about what I thought was an engineered break that was being done by Trump to get many of his goals into place. And I still believe that I'm right on the money with that. It's unfortunately not on the website. When I put up these videos, you got to look at them. But you can go to YouTube under irapstein.com or my name, Ira Epstein. You'll see it there, and from there you can play with it. Tonight you're getting a little bit of a bounce after a monster break today in the stock market. The whole week has been a big down. But you have to ask yourself, why isn't gold rallying when we've seen the stock market break? The dollar was 109.20 at approximately the day the president was sworn in, January 20th. You went under 104. Low dollar, interest rates that have fallen, a stock market that's broken, and you can't seem to get going in the gold. We'll talk about that in a moment or two here. Tomorrow you have some important information. We get the February non-farm payrolls report. I normally don't show all the numbers, but it's important, so I will this time. They're looking for an increase to 170,000 jobs from January's 143,000. The jobless rate is expected unchanged at 4% and pretty close to unchanged in hourly earnings, up 0.3% month over month. Those would be strong numbers. Now, there's outlier numbers in this. You saw the ADP number as to what's going on with the planned job cuts and so on. So you can expect a lot of reaction to the report, almost regardless of what the number comes out at. The Federal Reserve is going to release their January consumer credit. They're looking for it up $14 billion, but that's way less than what it did in December when it went up $40.8 billion. So, you got to look at that and understand that was Christmas time, a lot of buying, then the cold weather set in. So there's a lot of things going on there, and you want to pay attention. Plus, of course, we got President Trump in, and now we're getting Doge. So there's many things that you want to look at. But as we take a look, you can see energy prices as a whole dropping, bonds and notes pretty much unchanged tonight. The foreign currency market, dollar's not open, but most of the currencies a tad lower. So let's go to the chart action. Number one, you're still up for the week, 2.44%, up $69 for the week. The market is near the all-time high close, and to help you with that as to what it is, it's right. Whoops, come on. There you go. It's a 29.3760. And as you can see, then it slipped back and it's been coming up since then. Will we get a new high close or not? Well, that's going to be important. Some traders might think you're going to bump into some resistance up here. I can tell you on a seasonal basis, gold typically comes alive later in the month. Nothing's been normal right now because of all the chaos that's being caused by Trump's tariffs on, tariffs off. You have 25% tariffs. You have no tariffs the next day. It is beyond confusing. President Scheinbaum says that Mexico doesn't have tariffs on U.S. goods. So then I'm reading that the White House is saying, well, if you go to USMCA, about 50% or so of the goods from Mexico, would not have tariffs on, the other 50 would. Well, if it's reciprocal, why? So I don't understand it all right? You probably do, and maybe you have a better feel. Does it really matter? It changes hourly. Even Canada's gotten a break from the president, but come April 2nd, this whole thing's going to change again, and as we get closer, we will see what happens. The one thing you know that the president is sending a message to worldwide. If you have a tariff on the United States, you're going to get a tariff on you. Do you have that? Do you understand it? USMCA deal or not? And the president's already confirmed that come next year, he wants to review and look very hard at these autos that are in the USMCA deal. So that's coming on top of everything. Ms. Scheinbaum played it right. She didn't get in his way, but Canada has a lot of tariffs on a lot of goods. The president thinks that they'll only be able to get about 37% not tariffed. So we will see what happens. That means a lot of tariffs on goods that he's saying. Okay. When I look at the chart here, this doesn't look like a market that thinks the world is ending if you look at the stock market or the break in the dollar. You could disagree with me, but the chart doesn't lie. You're not up at the highs. You're sort of midway in the market. The pattern is still one of lower highs, lower lows. I would now say, instead of worrying about that high, the trade would actually probably get a bit bullish if you cross now 29.41.30. And as I told my traders today, if you put on the window envelopes and some of the other numbers, I think the pros came out against that 2,900 level. There were plenty of reasons for it. Do you disagree that the market's on either side of that 18-day average? It went into a pause there. When this rally ended, we paused. It does not mean you're entering bear territory. It'd be easier to get bullish if the market got over 29.41.30 than it would bearish. And then I'd have a goal that if you did that and stayed up over it, you could be looking at the 29.80 level before you know what's going on. Momentum-wise, you had been oversold. You came down, you hit the Bollinger Band when you were oversold. Cover, cover, cover. You know what I teach there. And now you're back up into this important area. When you look at the gold-silver ratio, silver is underneath the 18-day moving average of closes, which means chart-wise, you're needing fewer ounces of silver to get 1 ounce of gold. You no longer need near 92. Now you need 88 ounces, which says silver's stronger than gold for the moment. Chart-wise, it's not. Chart-wise, you have a lower low, higher high, the combination, and we talked about this each day this week, getting down to the Bollinger Band 200-day average. First, it was the 100-day in the Bollinger Band. It went to the secondary level, and it came alive. Yes, a lot of this has to do with what's going on in China. Yes, a lot of this has to do with tariffs that are coming on the metal markets. I really believe that's happening. Steel, aluminum. Remember, another week you're going to get to that level of where the tariff's at, and then you get to the April 2nd number. One of the things you looked at, if you were looking at U.S. trade deficit, you saw that the deficit jumped $30 billion. Well, a lot of that has to do with products that are being bought. A lot of metals, by the way, being brought into the United States before the tariffs hit. And that's part of what is going on. So the deficit would go that way. And then when the tariffs hit, you shut that off and the deficit will go the other way. So things you got to think about. In the copper, the first challenge of an upper Bollinger Band, when you're getting into overbought territory, any reading over 70, is overbought. I think the pros stepped out of the market temporarily. And yes, this is a market that I've been talking about for a long time, where I think that it is a market that's on the guideline for tariffs. When you look at platinum, as I've said, you keep staying under the 200-day average in gray, and the 18-day average in the 100. So it's been a bear market rally. Bear market because you're still under the 18-day average of closes. The market is correcting that. The objective was, when you lost the embedded reading, to go to the closest moving average, and it did in the 100. So whatever it does from here, it does. And I think the dollar's now getting a bit overdone. The first challenge of a 200-day average, yeah, you can slide through it on the day you do it, but you typically start bouncing around it. So I'd be very careful here. In the past, by the way, remember, these are the March futures. You'd have to go to the cash dollar to see the importance of any other number, but I believe you're ready for that type of bounce. So in a nutshell, you might want to take a look at another indicator. I know that I got a lot of you looking at right now the pivot points, but there's another one, and it's called the Aroon indicator, and you probably have it on your charting software. And it's time and price, and they're very important because the indicator can measure that and help you do it. It's a 2-part video series, and in the video series, you're going to learn to create these type of charts. Your software will do it for you. You don't have to do anything. but it measures the number of periods since a previous high or low, and it starts looking at different ratios within that, and where it's laid out, is the market ready for a turning point? I teach you how to set it up in there. I teach you what the charts will look like, and then I teach you a bit of the analysis of it. So if you're interested in another one of my free courses, because this gives you an idea of how I teach, it's right there for you. Take a look at it by going to iraepstein.com. Under free offers, it's the Aroon indicator. You can move your cursor up here, and that'll take you there as well, because when you get up there, there'll be an icon. I'm Ira. Have yourself a great evening. Catch up with you in the morning.